All right, recording is active. I think we've got a good number of people logged in here already. My name is Rachel Kanipe. I'm the founder and CEO of Women in Tech and Entrepreneurship. We're here tonight for our pitch clinic. We have an angel investor, Amy Crosby, with us. She is going to give you a hands-on guide to perfecting your pitch. She is drawing on real slides that have one real investment, and she's drawing on her expertise as an angel investor, a SCORE business mentor, former Silicon Valley executive, and currently she's also an entrepreneur as well. So you're really in for a treat. Just a little bit about Women in Tech and Entrepreneurship. For those of you who are not familiar, we are on a mission to resource women with near-peer mentorship, educational opportunities, and a support network. And we do it all for free thanks to volunteers like Amy, Paige, Lisa, and many others who I see with us tonight. And of course, sponsorship is always important to that. We believe financial barriers should not limit your opportunities for connection and success. So we don't charge you to participate in this community or any of our events. Who we are, we have more than 5,000 women working in tech, startups, venture capital, entrepreneurship, economic development, and support organizations like our friends at NAVO, and of course, our male peers, friends, collaborators, co-founders, supporters, and partners. We do have quite a few entrepreneurs and budding entrepreneurs in the group, and we want to bring more of you towards successful entrepreneurship. We do that in several different ways. We do offer a job board and virtual community to keep the networking conversations going, to do those wonderful resource sharing exchanges, and to post resumes for qualified people. You might be hiring your talent after this really successful pitch that you do and you get your first round of investment, or you may be looking for a career in tech yourself. We offer a wide array of social events and workshops and fireside chats like this one. Everything from how to lead smarter with AI to, ask an investor anything, ask an entrepreneur anything. And next up, we have a really special seminar. We are teaming up with our friend and ally, Jeff Bitten at Pitch 59. He is a wonderful girl dad entrepreneur and all-around champion for the work that we're doing here at Women in Tech and Entrepreneurship. I've been getting to know him over the last 6 months, and he's been very invested in helping us grow this community, create our own referral pipelines, and find avenues to support that free model that we offer. He wants to extend that out to the rest of our community and help the women who are here learn how to get referrals every day. It can be a really uncomfortable conversation. There can be a lot of ambiguity around how to set up great referral programs. Jeff is going to help us understand the psychology behind why people refer, why they don't refer, and how to get those winning referrals in an emotionally intelligent way. That'll be February 6th online. Additionally, if you're here in Florida, we have meetups all over the state: Jacksonville, Gainesville, Tampa, St. Pete, Fort Lauderdale, Palm Beach, Orlando, and more. And we are also looking forward to an in-person session in February in Jacksonville, Gifted, a celebration of Black digital artists. You can sign up for any of these events for free by scanning this QR code. You can also follow us at that QR code to get a notification when we launch new events. So it's a great way to stay in touch. And we mentioned we are serving our university students. We have our first ever chapter on campus at USF. We have invited our students to join us tonight at this session. If you are a University of South Florida student and you're with us tonight, we'd love for you to scan this little teal QR code over here. It is a really important way that we share our engagement metrics and find resources for the student chapter on campus through the USF administration. And if you are a student and you have never heard of this chapter on campus, maybe you found us on Eventbrite, we have a QR code, this purple QR code over here. You can use that to sign up. And finally, we are getting into our presentation at this point. It's time for you to share your goals for tonight. Amy has prepared a 2-question survey, very brief, to really help us get a pulse for where you're at in your entrepreneurship journey, where you're at with your pitch deck, and she's going to tailor the conversation to help you get the most out of your session tonight. So we're going to take just 2 minutes to get those results in. I will share the results with the team, and we'll see what the makeup of the group looks like tonight. I see we've got results flowing in here already. Awesome. And some very clear themes.
Where's the survey located? For
scan the QR code.
Oh, okay.
And then once you've had a chance to submit that survey, if you just want to throw a little emoji in the chat, we'll try not to rush through. Yeah, 150K and funding is an amazing accomplishment, but being pre-revenue does make that harder. I think Amy may be able to speak to that too today. All right, I think we've got a consensus here. So I am gonna drag this over and share the results so that we all are on the same page. And then I'm gonna hand it over to Amy to take the reins. So we can see of those who are here tonight, the majority say that they don't have a deck yet, but they may need one in the future, or they've started a deck, but they'd like some guidance to finish it. We do have some people who are ahead of the curve. They already have their pitch deck and they want to refine it. And 3 have the perfect deck and they want to validate their genius. So if you've got the perfect deck, we'd love for you to share that with us too. Your peers here can learn from that. And we have some investors in the group, so who knows, maybe someone will be interested. And then what areas are you most interested in? Overwhelming majority of us want that inside the mind of the investor insight. And we do have some who want to know what to include, getting some hands-on help with those particular slides, and trimming and streamlining the current deck. So with that shared, I'm going to pass the torch to our incredible speaker for this evening, Amy.
Okay. Thank you so much, Rachel. I'm so happy to be here, guys. Hang on just a second. I don't want to screw this up. And let's go to presentation mode. Okay. Can you guys see the presentation? Hello.
I don't know if you can see the emojis.
Yes, we can see it. We were doing thumbs up.
Positive reactions. I think
Okay.
you can figure out Amy is on a single screen presenting right now. So I'll help moderate in the chat. If you have a question you want to drop in chat, I can help with that. But otherwise you can hop on camera, hop on mic and ask as well.
Okay, so you guys can see my slides. Okay, great. Welcome everybody. I'm happy to be here. You can't hear me, Rachel? I just want to double check.
Yes.
Okay. Okay, so I guess let's go ahead and start with why should you listen to me on how to do a funder deck? And that's a very good question. So a little bit about me. I grew up in Clearwater, met and married my husband in Tampa, and moved out to Silicon Valley in 1997. And I was there for the next 20-something years working at various tech companies in the areas of marketing and business operations, as well as chief of staff for C-level executives. And then I retired in 2020 and moved back, planning to travel the world, and COVID hit. So I didn't really have much to do and I got really bored. And so I was looking for things to do and was introduced to seed funding, which is, giving investing in pre-revenue startups in the Bay Area. And I didn't know the first thing about it, but I thought it sounded like fun. So I joined and learned a lot. It found out that it was very different than typical business that I was used to. And so every week we would see presentations from different startup people wanting funding, and you get to see, I mean, literally dozens of them. And as I was watching them, I was seeing, you know, what worked, what didn't, the questions we had, how they answered them. And I thought, you know, what might be really helpful for people is to understand what we're looking for as investors and be able to give them some advice from that point of view so that they could create a better pitch deck. And so that's the genesis of this presentation here. So I'm going to start with a little bit of background stuff about pitching and investment capital that you may or may not know. So if you do know this, sorry, and it's a little bit of a remediary for you, but I do think there's a lot of people that don't understand some of these concepts, and I think it's good to know them. It makes it easier to understand the rest of the presentation. So first of all, a concept that I was not aware of is a growth business versus a lifestyle business. And if you are an entrepreneur out there or a founder, it's something you should be aware of and something to think about. And I'll explain why it's important in the investment area. A growth business, as you can see, is basically a founder who wants to build a business. A lifestyle business is usually from a founder wanting to work on their own terms. They want to have a little bit more flexibility. They don't want to work for a boss. They want to do things their own way. And the reason that's important, then the second piece of that, sorry, is that growth businesses have to serve a very large and diverse market, because in order to get investment, you have to have a high potential for multiple ROI. So what that means is you have to be able to grow very large, very fast in order for me as an investor to make a high return on my investment. And if you serve a narrower or limited market because you want to work on your own terms, you have a lower potential ROI. And that doesn't mean it's not a successful company. It just means that it's run differently. Your goals are different. And from an investment point of view, I'm not going to be as interested in investing in a lifestyle business. And most of them don't ask for investment capital. They get funding through other sources. So it's something to think about. It also impacts how you run your business. A growth, for example, if you make your first $100,000 and you're a growth business, chances are your first thought is going to be, I'm plowing that money back into my business to grow it further. If you're a lifestyle business, you may say, hey, I've been busting my butt for a while. I'm going to take a little bit of money out and put it towards other sources and then put the rest into, getting new customers. It's a different way of running your business. And it's something to be aware of because it is going to affect funding. Now, if you're on this call and you have decided that, oh gosh, I have a lifestyle business, maybe I shouldn't listen to the rest of this presentation. I wouldn't hang up just yet. I do think there's still a lot of other good information in here just about how to think about your business and things like that that might be helpful. And I should say now too, though, is as we're going through, I will make these slides available at the end, so you don't have to write everything down or take screenshots. But if you have specific questions on certain slides, just note them, and in the Q&A, we can go back to them. And I'm happy to dig further on any of these topics as we go through it. So the next piece that I think it's important for you all to know is that the funding environment. It's kind of a funding 101. So there's kind of a life cycle of funding. The pre-seed stage usually means the business is prototype or proof of concept testing. You basically have an idea, you're fleshing it out, you're making sure it's an actual good idea that people might be interested in. And the funding from that usually comes from what's called bootstrapping, which is basically maxing out your credit cards, and from family and friends. And you're usually talking in the tens of thousands of dollars. After that phase, you move on to seed funding. At the seed funding level, you have to have an MVP, which is a minimum viable product. That means that you have to have something that you could show somebody else. It can't just be an idea or slideware. You may or may not have launched. You're usually in that phase of being ready to launch. And at that point, you can start looking for seed and angel investors or crowdfunding. And that's going to get you into the hundreds of thousands of dollars. After that, we get into what's called Series A. And that is usually you're refining your product and you're building your sales. At that level, VCs, accelerators, and super angels would be interested in you. And you're talking more like millions of dollars now. And then you can see you go into Series B and Series C after that. And those are different areas of growth. And again, we're still talking millions of dollars, but you're talking about VCs, private equity, and hedge funds getting involved. So what I'm going to be talking about today is the seed level. That's going to be the first area that you start pitching to. So this is going to be focused on that level of funding. So what do funders want to understand you can go on Google and Google, pitch decks templates, and other, you're going to get a ton of them. And you're going to see some variation of this. This is pretty standard, the type of things that they're going to want you to show them. What I'm hoping to do tonight is explain to you why we want to see them to better help you figure out how you want to present that information to us. So I'll go through each one of these and kind of explain and give you some examples of what that looks like in successful decks. So a couple tips on that is each of the slides I go over is going to give you a series of questions, and you need to be able to answer all of them. But you don't have to put every answer on the slide. You need to customize the slides for your strengths. And that means you need to think about, what am I going to show on the slide? What am I going to speak to in my dialogue? And what am I not going to mention unless I'm specifically asked? So as you might imagine, you want to put your strongest story on the slide that, ties your whole story together. You want to be able to speak to it so the slide doesn't get too busy. But you might want to keep some information to yourself because it's not a strong point, but if you're asked, you need to have an answer. So that's kind of how you should approach the deck as you're creating your slides. Now, the next thing is know your audience. So I'm going to give you a little insight into what investors are thinking when you're presenting to them. So the first thing is we're looking for, are you addressing a real problem? And that may seem kind of simple, but a lot of times you're in an industry or a market we don't know that much about. So you may talk about a problem that in the real estate industry, everybody understands. But to me, as someone who came from tech, I don't know anything about that. So you need to really set the stage and explain to me, what is the situation? How is this a real problem? And then secondly, do you have a better solution? And show me how. Is this just a variation of other stuff that's out there? Or are you really coming up with a new way to attack this problem? And if it is a real problem and you have a solution, why isn't someone else done this? And the reason I'm asking this is it may be in my mind that it's not a viable market. So I want to understand why somebody else hasn't done this so far. And I'll give you some tips on how to do that. So once you've kind of caught me, I think it's a good idea. There's a real solution here. Now I'm thinking more nuts and bolts. Is it going to be profitable? And that's where your market comes into play. How big a market is this? And is there enough of it for you to be able to grow and make money off of it? And then lastly is, what are you going to do with my money? If I'm giving you this money, what exactly you're going to put it towards? I want to understand that. And all this and the entire presentation leads up to, do I feel you're the right person for this? So it's kind of a job interview for you. You tend to get very close with your investors, especially early on at the pre-seed stage. They often will advise you and work closely with you on things. So we want to understand you as a person. How do you think? How do you problem solve? Can you think on your feet? Are you open to suggestions? Things like that. So those are the kind of things we're going to be gauging about you as you're presenting to us. So let's get into it. Cover slide seems pretty simple, but there's a few things I'd like to point out. One, of course, your company name, but also it's a good idea, best practice to put the date on it. Occasionally you're going back to the same investment group and pitching again or pitching later, and your company as a startup changes so quickly, your slides may have changed. So you want to make sure that they are looking at the latest and greatest. So always date your slides. Put your name and the title of people that are presenting, because chances are we're going to be Googling behind the scenes as you're presenting to us, and we're probably going to look you up. So might as well give us your names now. Your logo, your website. This may seem weird as well, but we're again going to Google your website. And if your name of your company has common words in it, you may not come up as the first thing on the page. Or if you have a different suffix like .biz, we're not going to find you right away. So just go ahead and give us your website right off the bat. And the tagline, if you have one, is great. Couple examples of this. And again, all these examples came from companies that pitched for capital and got millions of dollars. So these are all real companies that pitched. All of this is public domain, and you'll see some names that you recognize, maybe some other ones you don't because they're more international or in niche markets. But these are a couple examples of a good cover slide. This SEO Moz does not list their website on it. I would have added it. And again, Yallo, as you notice, it's a good thing they did list their website because I would not have found it because their website's yallowchat.com instead of just Yallo. And they did, they forgot to put the date on it. So again, these are examples of a good cover slide. Moving on, the current situation. Basically, what's happening to create the need for your business. And it's a good idea to use outside data and cite your sources. So lay the land for me. I may not know your business or your industry, so tell me what's happening. And something has to have happened. Usually it's something like the world is changing, you know, the internet coming online, people working from home more. Something has happened to change the situation. Also, laws can change, and you're addressing that. So just kind of give me an idea of what's happened. Here's a couple of good examples. The first one here on the left is Crunchbase, and they provide information for private companies. And I love this slide because they have a visual that outlines what they're trying to say in their slides. They use a lot of really good data. I would have sourced it if I were them at the bottom, but it's a good cover slide. And then this one here, you may have heard of Uber. This is literally their pitch deck from 2008. And they outline what's happening. Now, you may think now, well, Uber is pretty straightforward. Why do they, you know, have to lay the land? It's like, but if you look at it, there's a lot of reasons why they are going to be successful, not just I have a hard time getting a cab. So these are things that we may not understand. So you need to, especially if we're in an industry we don't know about, explain kind of a little bit more about the market that you're in. So from the current situation, oops, sorry, I am pushing the wrong way. There we go. Then you get into the problem. So the whole reason you exist should be to solve a user's pain point. So what is that pain point? You may talk a little bit about why it hasn't been solved before. And again, this kind of leads into, if it hasn't been solved before, maybe it's not a real problem, or maybe it's not a viable solution. So if you have that answer, it's great to show it. Also, if you have unique insight, very often good presentations or good companies come because you are a practitioner in a certain field and you see the same problem come up over and over again. And so you decide to start a company to solve that problem. That's a great thing to offer up and explain. Also, maybe you have a unique skill set, like you have a college degree in one thing, and you worked in that field, but then you switched to another. So you have a unique insight into how to solve that problem. This is a good place to bring that up. A couple examples of some good slides for this are Buffer. Many of you may use them. This slide is from years ago, before there was no other way to do this, but their problem is, as it points out, social is really important, and the amount of social outlets have doubled. And so that has become a real problem for marketers. Another one is this company on the right that's called Cremo.co, and they provide specialty micro brands of coffee to the market. And so they set up their problem by saying that there's 5 conglomerates that mainly own all the coffee, and you can only get a handful of them. So it's really hard for people looking for unique boutique coffees to find them. And then, of course, you pay off the problem slide with a solution. So how do you fix that problem? This is a good place to point out if you have any proprietary software, any patents, any copyrights, anything that really is going to strengthen your solution. And again, looking at the same companies, this was Buffer's solution payoff slide. You can queue your updates. You can plan them ahead of time, and then they'll execute on your behalf. At the time, it was groundbreaking. And then again, here's Cremo, who talks about the fact that they make it really easy for these people to subscribe and get the coffees that they want. So after that, you can start talking about your business. You've set it up. I understand the consumer, the customer that you're, their problem and their solution. Now tell me how it works. There's a few ways you can do this. Sometimes it's helpful to either speak to or show the old way compared to the new way. There's a walk through a typical use case. How is somebody going to use it, or actually do a demo? Couple notes if you're going to do a demo. You can use your live site, and that's great. But if there's any chance it's going to mess up, like if you're not sure the results you're going to get, you can do these quick little videos online just so that you have a little bit more control over what they're going to see. But you can use your real product. You can just pick and choose the version of it you want to show. But I will tell you, this is where a lot of presentations fall down. You need to explain it to us like we're 5. We may not understand your business. And so make sure you literally show us. It's very easy for us to understand how someone uses this. We end up having a lot of questions about this section. A couple companies, I'll show you a few different ways to do it. This is Dropbox's initial pitch. They literally talked about, this is what they're doing now. This is what people should do. And then they went into a demo. I probably would have combined these 2 slides if I were them, but it's a great example of how to walk people through it. A couple more. Tinder. They basically just showed the screen and then walked through how you use it. Airbnb. They made it very simple to show you. You search, you review the listings, and then you can book a room. Now, these are fairly easy examples that are easy to glean. Rogo, they provide investment advice, AI investment for financial companies. So it's a little bit more complex. So they went into a little bit more detail about how it's used, but they go through very different use cases because all 3 of them they can satisfy. So if you do have a little bit more of a complex product or solution, feel free to talk through different use cases and how you solve their problem and how they use you. Then you want to get into the value proposition. So you've showed me the product now. So what really makes it valuable to your customers? And of course, the gold standard on this is always you save time or you save money. But not every business or product is going to do that. There are some other things that you can offer as well, such as a unique experience or expertise. Some other ones nowadays, the environmentally friendly or targets underserved markets. Those can be real positives for a company sometimes. So your product or solution may fit in there. Some examples of that are Mint. They are a financial tracking software. They basically said, we save time and money, and then they pointed out and explained how. This one over here is WeWork, and I'm sorry the slide is kind of blurry, but every example that they have is blurry online. But essentially, I'll try to tell you that what they did was the graphic here explains how they save you money, but then they also talk about the fact that they offer substantial convenience and networking as well. So it makes it a bigger selling proposition. And then this company, Amplify, they sell life insurance as a way to acquire wealth. And so theirs is more in the area of a superior experience. And so they explain all that in this slide. So it's a really, nice, easy way to explain to you in a little bit more detail what they do, since it's not such an easy sell. After that, you want to talk about the differentiation. You've talked about why you're of value to your customers. Now it's good to go into what is your unique selling proposition. And you can't just say, we're the best. Show me some really good examples or data that support the claim that you really are differentiated from your competitors. Here's a couple examples here. This logo, if you don't recognize it, is Peloton. They talked about the fact that one of their differentiators is they balance a really good product with an emotional storytelling. So that was their unique differentiator. Another way to do it too is to literally stack yourself up against the competitors. This again is from Dropbox, who did that. So there's very different ways you can show that how you differentiate yourself from the competition. And that leads us into the competitive situation. So you've now showed me why you're better, but now I kind of want to see what the landscape is. And my biggest piece of advice on this is don't say you don't have any competitors. You do, even if the competitor is what people are doing now. So be upfront about it. Explain why you're different. And often here, you're going to get asked, what is your moat or what's your barrier to entry? And that means how easy would it be for someone else to come in and do what you're doing? And a lot of times you think it would be very hard, but we're thinking it from the point of, could Amazon throw a bunch of engineers at this and basically do what you're doing with a few $1 million? So explain any unique things you have that really make it difficult. Sometimes it's your first to market and you've acquired a following. Sometimes it's something that a different way you've approached it, but try to show why someone else can't jump on this bandwagon and do it and eat your lunch in no time. Some examples of this that are useful. Over here is hims and hers. I don't know if you bought these sites. They sell personal care products online. They've used the typical quadrant thing to show that this quadrant was empty and they're now filling it. And then this is Mint again, who talked about their key competitors and their advantage. One of the things I like is both of these examples talk about their defensibility, that they're able to really defend their place in the market, which is a nice, strong way to put it. Now, tell us a little about your customer, who's going to buy you. And again, there's the typical demographics, psychographics, things like that. And also focus on a single target. I know your product can probably be used by a lot of different markets, but if you're at this early stage of developing your product, I don't want you to try to boil the ocean. I want you to pick a target and nail it. So, definitely mention the other ways your product can be used, but show us how you're really going to attack this one market and be successful.
Just a quick, we've got a lot of questions coming in on the chat, and I think maybe this is a good breaking point to bring them in without interrupting you too much.
Okay.
Joanna Tata wants to know if this advice for business overviews also works for B2B companies and what you should do when you only have 2 minutes for your pitch.
I think it's that at the end more about consolidating it. Yes, when you're on speed dating, it's a lot harder, and that's more of an elevator pitch than this kind of a pitch. This kind of, you're not going to ever get investment capital with a 2-minute pitch. So that would be more, I would think, for, trying to get someone interested to then sit down and go into more detail if you're really looking for investment capital.
And there are some local pitch contests that do the 2 and 3 minute timed pitches. So maybe we can talk about
talk at the end about the slides to leave out for that.
Okay. And then next question that we have, Shantia asked, should we include the target audience? I'm not, Shantia, if you want to hop on context here, like we save principals, guidance counselors.
Well, I was talking about more so on the value prop screen, because that's what our tool is, targeting guidance counselors and principals. So I was saying, should I just call them out? Because I don't have that currently. So I noticed that her thing was saying we save time and money. So should I say we save guidance counselors and principals time and money, and then break down how?
You can certainly do that, but usually up until now, you've talked about the fact that you're selling to guidance counselors. So hopefully in your, when you talk about the situation, you would say, hey, guidance counselors are facing this situation. Okay. This is their main pain point. This is how we solve it. Does that make sense?
Okay. Yeah, that does. And the reason I'm asking is because I do a lot of pitch competitions. So even though I say it at the end, some investor always asks me, well, who's your target audience? And I'm like, yeah. I've already said this.
Were you not listening? I worked so hard on this pitch. Oh,
yeah,
no.
And you're telling us a story. That's the other thing too, is you have to realize you're trying to get us in your headspace. So start at the beginning and weaving in this, so yeah, start talking about your specific customer and what they're feeling. Tell me the story from your customer's point of view. This is what they face every day. This is their problem. This is how we help make it easier for them.
And Shantia, if it makes you feel any better, a lot of the women in our community share stories of, I pitched the whole thing and then they come back and ask me this question about something I worked really hard to put in there. I know that I said it. Not uncommon, right?
Yes.
Doesn't necessarily mean you did a bad pitch. Just might be that person is not paying attention.
Yes, and that is very common because we're in the background Googling. So we stuff. So yes, it doesn't mean that. And just speak to it again. And and you will get questions over and over again and people just don't get it. Some of the tips I've given you will help you explain it more, but you're always going to get some people that just don't get what you're trying to say.
Yeah. And then we have another question here from Catherine. What if your business isn't targeting consumers? I know that we've shared some of those B2C examples just because they're more recognizable in our day-to-day life. But Amy, how would you address that?
It's the same thing. You can still, the thing is even though you're selling to a company, it's a person at that company that's using your product. So you come at it from the customer point of view. If you're talking to accountants that have the same, problem all the time, you do it from that person's point of view. If you're selling to the, Dropbox, I think, started for companies, so you're selling to the person who has to manage data at a company. So you're still selling to a person. Talk to it from that customer's point of view. Does that help? Whoever had that question.
That was Catherine. Hopefully.
That kind of helped, but usually what I'd be targeting would be government contracts. So there wouldn't really be a target consumer. It'd more be like a target requirement.
A target department? Well, what
Like
is
a target requirement?
Yeah, so government contracting decks are going to be a totally different adventure, probably. Just having worked in the DoD space myself for a while, I think some of this is still transferable. Amy, if you'd like to try to tackle that.
Yeah, what exactly? So, but if you're pitching, so you wouldn't be pitching to the government to buy your product. This would be more somebody to give.
Well, so the Air
No,
Force
I
in
know.
particular does host some reverse pitch days where they can do on-the-spot awards and contract awards to innovators. I'm not sure if that's your situation, Catherine, but it does happen.
So I was looking at it. There's a couple things, like there's a Softworks in Tampa, which I was planning on pitching to. I didn't know about the Air Force thing, but I think I'll try to pitch them as well. But basically I'm trying to do something that's first in its class, and I just don't know how to.
Can you give me a little bit more information about like what it is?
I'm basically building fiber optic ground links for UIS systems.
And why is that a good thing?
Because in this in the modern threat environment, there's a huge amount of like jamming going on, a lot of ECM systems, and in the front lines of a lot of conflicts nowadays, especially in Ukraine, this is a big trend that we've observed, is that you can't even operate like these UIS systems like at all. So with a fiber optic link, you would be able to operate these systems even in these highly contested environments.
And that's exactly it right there. So you're still you're solving the pain point of being able to operate in these really hard environments. So that's exactly how you would pitch it. That's the person's pain point that you're talking to. So your customer would be the people that have to manage those things, the people that have to roll out communications in those areas where the typical thing won't work. And so they need something different like yours.
All right, appreciate it.
Does that make sense?
Definitely.
Okay.
Sorry, we've got more questions in the chat, and then we'll just do a couple more, and we'll keep moving along if that's okay, Amy.
Sure.
All right. So, and then Catherine, I'll circle back with you individually on some resources for the space that you're looking at. I think this is a good one, and I think there was good advice shared in the chat toward this, but in case you're not watching the chat and you find yourself in this situation, it's good to be aware. So, Taylor asked, is it true that no one will invest if I don't have a team yet? I can't afford to hire yet. Shantia was right on the money with, addressing this with the advisory board, looking to free resources like SCORE. Amy is a SCORE mentor. But Amy, from an angel investor's perspective, how do you view a solo entrepreneur?
I don't think that's a problem at all. I think it's if you've put in time and money. Now, where it's going to be is, I will tell you this, we're not going to fund your lifestyle for you. I mean, you have to have put some skin in the game and have invested some money yourself, but I don't think it's a detriment to be a single, just a founder only. And you could be asking for money in order to hire someone else to help you. At this stage, most of the asks for funding, and I'll get to that when I get to the ask slides, we want to know what it's for. It's for developers. It's to develop the product. It's to do something to get it to market. So I don't think that's a problem at all.
Yeah, fabulous. And then one of the...
Your suggestion of having advisors or advisory board or something, that's also helpful because you don't want to be in a silo. So being able to say, hey, I work with a team of advisors, or, I'm very close to these certain people or groups that also help me. That's helpful too.
Definitely. One of the things that also comes up with this in the conversation, Amy, is, whether or not to give them an advisory share. This is a huge, important topic. We could probably do a whole session on this. Shantia is right. Again, a lot of people who believe in you will not ask for it. I have seen a lot of advisors come on board who are real hot shots, but they don't contribute anything at the end of the day that they promise to. So one of the ways that I've seen people handle that situation that works really well, same as, hiring employees on equity, is having the equity vest over a period of time, right? Ghost shares can also help with this, so they need to be actively involved, but Amy probably has some better, more sophisticated insight as an investor.
I don't know if it's more sophisticated, but I would say as an investor, I'm not going to want you to have been giving out advisory shares. Like Rachel said, most people that are true entrepreneurs will help you for free if you're that early on. And if you're this early in the investment and you're giving away shares to advisors, why should I give you money for shares? So I would not do that. I mean, unless some extreme reasons why you have to, I wouldn't do that if you can avoid it, because what you want to do is give shares for people that are going to actually give you funding.
Yeah. Really, really helpful. Last question, and then we'll dive back into the pitch deck presentation. And we'll resurface a little closer to the end for more questions. Heather asked, how would this compare for a company that's a service-based B2B, established business with a proven concept that's scaling?
It's still same things. All the same business basics are the same. It's just you would be talking more about your business than your product. That's why I kind of try to use the words interchangeably. You're still going to be talking about the pain point that you're, I don't know what it is. Like if you're a law firm or something, you still need to have a unique differentiator. What makes your law firm stand out? What are you going to do to be able to help people? What's a specific pain point that you address? You have to have something to hang your hat on. Otherwise, it's like, well, why would I invest in you? Does that make sense? As far as, you still have to kind of have an angle of what is going to make you grow over everybody else. You've got to try to think through what makes you stand out, what makes you different. Maybe you specialize in a special area or have a different customer service plan or something, but you have to have something that makes you unique and different, that gives you something to be able to grow with.
Awesome. Lots of comments in the chat. Super helpful. Thank you. Amy, you're fabulous. We'll keep rolling.
Yeah, and feel free to interrupt me if you need a break or whatever, but or if there's a lot of questions, that's fine. So I was just showing some examples of the customer profile. You can see Peloton again literally does the psychographics and the demographics. And then what I like about the Breck slide is they basically talk about the other thing I said. They're focusing on an initial target to start, and they explain a little bit more about that target, but they've essentially, talked about who they're going to focus on. From the customer profile and everything, now you want to get into how are you going to make money with this? And in a lot of situations, it's very clear. It's what you do is simple. I probably already know how you're going to make money, but sometimes I don't, especially some of these tech products and things. I don't understand it or how you price. So show me some examples of that. So for the example here, we've got Buffer again. They're a freemium. They had already been in existence, so they had a good conversion rate they could point to, and they literally do the math and talk about how they're going to make money. We work the same thing. They basically talked about the fact that they did have customers and they plan to roll out services to continually monetize their customer base. And so that's how they would continue to grow revenue. And then another thing that a lot of you will face, especially with online tools, is that you have two different markets that you serve and you can monetize both of them. You can charge one side for doing one thing and then charge another side. So again, this seems simple, but a lot of companies forget to tell us this part, and this part is very important to investors. Then your go-to-market plan. How do you plan to attract customers? And people often forget this too. We don't want your marketing plan. A go-to-market plan is a little bit different. We want the high points of how you plan to sell. And what I mean by that is, do you need to do advertising right out of the gate? And do you have to have a marketing budget to sell? Are you going to be doing direct sales, in which case you need a sales force? Are you going to be going through a channel partner? Are you planning to just use referrals to start off with and social media? But tell me how you plan to attract customers. Some good examples of this are Airbnb. They were going to do events and partnerships in Craigslist, mapped it right out there for us. It was really helpful, or for the investors. This is another one, Yalo again. They do retargeting. So for every person that contacts them or every lead they get, they're able to really convert at a much higher rate. So that's how they expect it to grow. And then the market opportunity. So hopefully you guys are familiar with TAM, SAM, and SOM, but I'll go over real quick. Again, an example of TAM is, the total market that's out there. For example, if I'm a coffee chain in Tampa that wants to grow, the total addressable market is all the people in the country in the US that drink coffee. Now, my serviceable market are the people that are in the Tampa Bay area because I can't really service anyone else. And then of the people in the Tampa Bay area, not everyone's going to like my coffee. So I can only get a piece of that serviceable market. That is my the market that I can actually make money off of. And you need to understand that. A lot of people will come to us and just say, well, I'm in the mental health business and that's going to be a $14 billion industry next year. And it's like, okay, that doesn't help me understand at all what piece of that you think you can realistically get. And it's good if you can walk through the math on that you can show. In fact, in the next slide, I'll show you, Airbnb did a great job of that. They talk about the fact that their TAM is 2 billion trips, but they are going to attract mostly budget and people that book online, which is their serviceable market, which brings it down. And then of that, they think they can get a specific share, which is 84 million. So that's a perfect example of how to tell me what your market opportunity is. And Mint did another good job as well. They talk about the number of people in the range they're going after and what they think they can get, how many are going to come from referrals and how many from advertising. And again, being a finance company, they did a whole lot of math in there. But it was really helpful to understand what the investors were going to get for their investment. And then you get into the current financial situation. And you don't have to, if we move further, we are going to look at your book. So it's good to keep good books. But at this point, what we're trying to gauge is how much money in the bank you have, how much your burn rate is, which is how much you go through each month, which means I see your runway. So for example, if you have $100,000 in the bank and you're spending about $10,000 a month, you've got a 10-month runway. I kind of need to understand that as an investor of how much time you have left and where you are, how much you are burning through each month to be able to gauge how much I'm willing to give you. It's good to understand what you're currently spending on, like I said, in big buckets. Early on, it should be things like research and development, product development, sales, things like that. We don't want to see a lot of salaries. We don't want to see, offsite parties, things like that. We want to see how it's really helping your business grow. Also, this is a great place to put any current customers. Current customers are awesome. It means somebody has voted for you with their dollars. They have said, this is a great idea and I'm willing to put money on it. Even if you only have a couple, tell people that you have customers. A really good example of a little bit too much information, but a good example of a financial chart is they put everything in here for me. They show the breakdown of the funds. They show their runway, their burn rate. They've got everything in here. I'm not sure what these two graphs do, but again, in one slide, I'm able to get a picture financially of how they're doing. A couple other examples are holistically, they have customers. And I will tell you that once you start to get customers and you are making an income, we are going to delve into, your finance. We're not going to expect as much detailed information from you because you've kind of already proven yourself. So I don't need to see all the details. But one holistically is talked about the break-even point, which they've passed and how much they're getting. So that's another good example. From that, we get into your projections. You've kind of told me where you are now. So what is up and coming? What are you expecting over time? Explain your rationale again, show your math. Don't just, say, I expect to have $1 million by the end of the year. How do you expect to get there? And this is also, I mentioned exit strategy in there. They may not ask you that at this point, but it's probably going to come up. So it's good for you to think about it. There's literally 3 exit strategies you can have. One is your business is phenomenally successful and you end up in an IPO. Probably not going to happen, but we can all dream. Second is you're going to sell to somebody else, merge with someone else, or get acquired. That is probably the best case you can hope for, and that's awesome. People make a ton of money and have very successful businesses on an exit strategy of merging or getting bought by someone else. The third one that no one hopes for is you go out of business. So have at least thought through what you think your exit strategy, what you think you're going to do. And what that means is, in that second case scenario, who would merge with you? Who would buy with you? Who do you think you would be good to move with? It's good to give that some thought, even if it's not on the horizon. Although some of the people that come to us say they've already been reached out to by some other companies. So some examples of this are Buffer talked about their milestones. Exactly. I like the chart on the bottom a little better, only because they add the nice graphic, just a little easier to look at. And then Mint actually did provide an exit strategy slide. This is unusual, but they were a little bit further along, and they did end up getting bought by Intuit. So they were right on the money with that. And then the ask. A lot of people forget about this part, but this is the whole reason you're coming to me is, how much do you want to raise? What are the current terms and your valuation? So a little bit about that is, the terms means a term sheet. And if you look below, I've listed the typical types of things. The only reason I list them is so that you will be familiar with these terms. You don't have to have all this worked out yet. You don't have to have a term sheet. You don't have to have a current valuation, but you should understand what they are. You can ask the people that are investing in you to give you suggestions on what that would be. So you don't have to have it all worked out. Current valuation is good to know. And what I suggest on that is, usually it's 1 to 3 times your earnings, but chances are you don't have any, or you're very early on. So there are methodologies that you can come up with a valuation, even if you have no sales. If you Google it, they will walk you through different scenarios of methodologies you can use, and you can pick one that seems to fit your scenario. But it is not mandatory that you have a valuation, but you should at least have an idea. A cap table is basically your capitalization table, and that is who has given you money, how much, and what have you given them, usually in shares. So you don't need to show that. They may ask you about it, how many people are on it, how much money have you, gotten so far. We're going to want questions like that. And this is also where, if you are willing to give a board seat, or you're looking for advisors or mentoring, a place to mentor it, because it's part of your ask. Also with the how much you're raising, sometimes you've got some people giving you money, but you're still looking for more, so that you can include that. Like, we're looking to raise $1 million, but we already have commitments for, 750,000, but we're looking for the rest. And then the last thing is also include how you're going to spend it. So again, I want to know what my money is going for. I want to know, are you going to be investing in marketing, and explain why, or is it for your product development, or what exactly are you going to spend it on, or is it, a couple different areas. So these, again, are some other good slides for the ask. Again, Airbnb had a great one. They wanted to get 500K for their round. This is how they were going to spend it to get revenue for 12 months. Another company, SoBet, is a nice little graphic that they did exactly what they were going to spend it on and what outcomes that was going to give them. So that's another good way to position it, so that I understand what you're using my money for. And then finally is the team. Who's on your team? I'll show you the examples here. What I want to know is why they're on your team. Sometimes if you put things like co-founder or CTO and they're the technology leadership, I get why. But sometimes it's good, like this slide over here, that kind of explain what expertise they're bringing to your team. And I want to know that. You can see these guys listed other people that have helped them out, and their partners and things. So photos are always good. People use those now. And then the other question I get asked a lot is, you'll see a lot of pitch decks where they put this up front. I would recommend it only if your team is a big part of the story you're going to tell. If the reason why your team began together is really vital to how your product came to be, I wouldn't put them up front. Otherwise, they're usually at the end. And then the closing slide, make sure you don't forget this, put your name and contact and any optional messages you have. And that is basically all the slides. Before I go into this, is there any other questions about the slides that I covered in the second half?
We do have some questions in the chat. Priska, why don't you kick us off?
Hi, thank you again for doing this. My big question was really about I think maybe slide 15, which is the convertible notes and safes. I've been trying to understand what those two things are, and for the life of me, I still don't get it.
It's tricky, and I'm not the best person to ask because fortunately, when I worked with the Seed Funders Investment Group, somebody else handled all that. But technically, what a convertible note is and what you see most common, and what it is basically a loan of money for a certain period of time. So you'll say that like, okay, we will give you $200,000 at an interest rate of 8% with a 20% discount, the discount I'm a little fuzzy on, to your note. And basically what that means is you're loaning them money for 2 years. At the end of the 2 years, you can say, I want my money back with interest, or you can convert it into stock shares of that company. So that's why a lot of people like it. So if the company's not doing well, or you don't like the direction it's going, you can say, I want my money back with interest. Or if they're doing well, you can keep going. You know, what often happens is companies don't move along as quickly as they would like. And so at the end of 2 years, they still haven't made much money. So a lot of times you have to extend the note. But that's the most preferable way to do it. I think the way most people do it, a SAFE is literally a simple agreement for future equity. It doesn't have enough parameters around it. So most people are getting away from that. So, and then the stock purchase equity agreements, I'm not as familiar with because the group I work with didn't use them so much. So hopefully that helped a little bit.
Yes, it did. Thank you very much.
Fabulous. Shantia, go ahead.
Okay, hey, great presentation, Amy. I've been raising for about 3 years now, and I was actually telling the group I actually got my first $50,000 convertible note through Seed Funders. So the Opportunity Fund invest. Yes, I was like, this is such a small world. I was like, Jeff didn't tell me. Do you know Jeffrey Keefe?
Yeah, because I'm in the Tampa chapter, so yeah, I work closely with Jeff. What company?
Yeah, so he sits on my he's my advisor, and I was like, he never told me about you because I would have contacted you to help me with my pitch deck long time ago. But anyhow, I was like, that is pretty cool. So yeah, they invested $50,000 in 2022, and we just they did a 5-year note for me. And as I was mentioning, I'm doing well at raising, but I am just still pre-revenue because my product was so hard to develop. Been in the education industry, so many compliance things that I had to meet to even get a school to even want to look at it.
Wow.
So finally my MVP is out. Whoop, whoop. And I'm running some pilots right now. But my main question is, so I've secured 150,000 so far. I want to close a $250,000. I have been pitching under pre-seed. So you kind of caught me by surprise when you said that it should be seed. And the only reason I've been pitching on the pre-seed is because I'm not revenue generating. So yeah. Am I pitching under the wrong?
No, and seed is pre-revenue. So seed and angel is considered pre-revenue. Yeah.
So am I pitching under the wrong because I'm missing out on opportunities?
And that's mainly just to kind of show people the trend, but you don't have to be pitching. You can call it whatever you want. You're talking about the dollars that you're talking about or that, and you can go to people that call themselves angels. You can call it pre-seed. That's fine.
Okay. And then what would you say the max should be for a pitch deck? Because I know that there's one where I email investors is not the same one that I present in pitch competitions.
Right.
So
right.
If there are two different types.
Yes. And in fact, let me go to my next slide that I was going to go to real quick and I kind of answer your question. So again, I did each of these as a separate area. You're telling a story. And so sometimes these are going to combine together. If you've got a really simple problem solution, they may go down the same slide together very easily, or even the situation problem and solution. Okay. Your business and your value may kind of combine. You may talk about the competition and the differentiation on the same slide. So you can combine these. A lot of it depends on how obscure a market you're in and whether we're familiar with it or whether it's something pretty easy to understand. The other thing too is, so that's where you've got to decide how to do it, but you can definitely bring down the number of slides. And in answering the question about the contest pitches, the things you're not going to go to with are these things. You're not going to have to go into financials, projections. You might talk a little bit about how you plan to grow. Again, you could talk about your projections in your go-to-market. you can talk about your team maybe, but you're not going to get into that area, but you're just going to go over this stuff really quickly. Like I said, you can combine these in a slide. You can combine these. You can, you don't need to include that stuff. So that's how you're going to winnow it down for a pitch competition.
Okay, and if we have time, I would love to volunteer at the end to share my deck and get real live feedback.
Great, yeah.
But I'll let everyone else ask their questions.
Okay.
Amazing. I love this. I'm asking these a little bit out of order, just in kind of relevance, right? Autumn Wright asked, and since we were just talking about pre-seed and seed, she'd like to know at seed, what % of your company should you anticipate on giving up or allowing investors to take?
Good question. It's going to depend on how much money they're giving you. So again, in a perfect world, so that's why you kind of need an idea of evaluation. So let's say, you do some stuff and you kind of, or for whatever reason, and usually it's a finger in the air, you think your company's worth $1 million. If they're giving you $300,000, they should probably get 30% of your company. Okay, so that's kind of how you have to think about it. Now, it's hard, and you're going to negotiate back and forth. You might be able to give them less, but you may have people that come in and go, "Hey, you got no money. I'm giving you the only capital you've got. I want 50%." Usually they don't. Usually people are going to take a smaller percentage, but it's just something you negotiate. But it's squishy. But you got to realize it's really going to be dependent on how much money they're giving you. Now, if your company is already making a ton of money and they're giving you 300,000, well, then your valuation would be higher and you wouldn't have to give them that much. So again, does that answer the question?
And I'll just add on to this. I think it's very important for you all to learn your venture math. You can figure out what that valuation should be so that you come in and ask for the correct amount of money for the right percentage so that you can recognize what is a good deal versus not a good deal. We do have predatory, I wouldn't even call them VCs because the practices that they engage in really are not practices that any VC would ever condone, but they're out there, right? So if you're not working with a reputable group like a seed funders, you could find yourself giving away more of your company than you should, or, potentially, I think more often what happens is coming in with a really high ask that does not line up with the valuation and the amount that you're willing to part with. And for some of you, venture might not be the right path or the only path. So Amy is developing really fabulous access to capital programming beyond just venture to help address that. Another question that we have in here, let me go up and make sure that I don't miss anything. We got the correct amount of slides. How do you know what your company's pricing model should be? And Shantia gave excellent advice here. Look at competitors to get an idea. What else would you say, Amy?
It's funny because my company is going through pricing right now. So I did a bunch of research on it. And again, I would recommend researching it. There are different ways to do it. I mean, most of us are thinking tech world and a SaaS company, and that's what I have. So looking at competitors at what the market will bear is probably your best way to do it, is figure out, but also do have an understanding of what your COGS are. What are your cost of goods? If you have more of a product that's more tangible or physical, your cost of goods is going to be much higher. And so in that case, you're going to have to do probably here's what it costs. I need to figure out what profit margin I need to get, and that's what my price is. So there's a lot of different ways to do it. So you can look at it, but those are usually the two basic ones. Or you kind of have that or a top down. The market will bear a certain amount because that's what your competitors are charging, and you've got to figure out then how to get your cost of goods and a profit margin to fit into that. But usually it's going to be, I need to cover the cost of making this and make a profit margin. So this is what I'm going to have to sell it at. You still have to compare it to your competitors and make sure you're in the ballpark. Otherwise, you may not have a viable business. But if it's something where it's really, really squishy, it's really good to look at what the market will bear.
Yeah, that's really helpful. From one of our USF chapter officers, Mriga, she is way out ahead of the game in her entrepreneurship journey. She is in a business incubator at USF, and she's in ideation phase. She doesn't really have that many expenses yet, but she's been asked to come up with the finances and projections. And she's wondering how she should go about this, if she's kind of estimating it to make sure it's as accurate as possible. Amy, this is something you and I sat down and did early on in my WTE journey. I don't know if you remember, there was a time when I had no budget at all, and you helped me kind of figure out how to do this. Can you share?
God, I don't remember what I told you. I think basically at this point, I mean, I don't know what kind of product it is, but to start your budget, I would start to think about, like, you know, what are the things that you need to have every month? Like, you're going to need to have a website and some other stuff like that, and computer and internet. And depending on, like, my company's a SaaS company, so I need to have servers at AWS to host the product and everything. So kind of start to think of the different buckets of stuff that you need. And then, you know, just do a little calculation or Google online how much it's going to cost to do some of those different things. And that's how I would build it. And again, a budget is sort of a stair step when you're growing, because like when you first start out, you may only have 50 customers and your budget's going to look very different than when you have 1,000 customers. Now, all of a sudden, you need to look at having help desk help, you know, somebody to man the help desk. Just different things that you don't have when you don't have any customers. So I would think of it, especially when you're small, to do it in increments and do a stair step as you grow, and your budget parameters are going to change as it grows. I don't know if that helps, and I'm happy to talk one-on-one. I'm a USF grad myself, so.
Go Bulls.
I mean, thank you so much, Amy. I would actually love to like connect with you over this, because I have this incubator phase from Jan till March. And if I do get through this, I'll get like the pre-seed funding from $15,000 to $50,000. So I really want to get through this phase to make sure that I get that. And if I cross that phase and I'm selected as the top competitor, I will get like $100,000 seed funding. So like,
Ooh.
So as a 20-year-old, this is a very like awesome experience, and to get your inputs on it would be like really valuable.
Yeah, sure. I'm happy to help. And in fact, you've done the first thing that every entrepreneur should do, and that is ask for help. And the other thing too is, and it kind of goes back to one of the earlier questions, is this isn't always a monetary transaction. You will find some people in this field that are not going to want to help you unless you give them a piece of your thing. I would bypass them. I have found so many people in this field, and I know everyone that worked at Seed Funders was willing to give it away for free. You can find people to help you that are not going to ask you for anything in return. They're helping you simply because they love business, they love entrepreneurship, they want to help bring business to Tampa Bay. You can find people like that. So just ask, and I'd be more than happy to help you. I think I can probably help you further if I understand a little bit more about the business you're thinking of doing.
Definitely. I mean, I will definitely connect with you over this.
By contact info at the end of the presentation, and shoot me a note.
Okay. Thank you so much.
Sure. And that's true for anybody out there. I'm happy to talk one-on-one with anybody who wants to. Were there some more questions?
There are lots more questions. So from Taylor, what advice would you have on people pushing friends and family rounds when no one in your circle is able to give?
That's a tough one. In that case, we usually like to see some friends and family, but a lot of times you have that situation and you can't. It's fine to go ahead and start looking for seed money. I would, there are a lot of seed money specifically for those situations. I know Seed Funders actually had an opportunity fund specifically for women owned and business owned by women of people of color and things like that. So a lot of companies will set aside funds for disadvantaged people that don't have the same, support that other companies do. So I would look for those and Google them online. I don't have a set of resources on that at my fingertips, unfortunately, but I would look for that. And I wouldn't be afraid to go ahead and reach out to some of these companies, because some of them do set aside money specifically for that.
Yeah, that's very helpful. There are also creative opportunities to crowdfund things, to, if you have an early MVP, generating some revenue can sometimes help you overcome that friends and family round objection, but it's certainly tough. It's definitely a gap to getting more people of diverse backgrounds into entrepreneurship, and especially tech entrepreneurship. Mm-hmm. So when we continue to go through these questions. We also have, let's see, I know I missed one. Oh no, I can't find it. If you had a question in the chat and you think that I missed you, please either copy paste it back or hop on the mic, and otherwise we'll get back into presentation mode.
Yeah, I'm almost done. I only think I have a couple slides left. So helpful info. This is for folks in Florida. I think we only have Florida people right now. I did do a quick search. These are Florida early stage investors. So these are the names of all the companies all over the state that do seed funding. Like I said, they may have divisions for opportunity type funds for people that don't have a lot of friends and family and stuff. And I would suggest checking them out. They all have a website, and most of them, you literally go on there and you fill out a form, you attach your pitch deck, and then they will evaluate it and get back to you. Some of them have criteria, like for example, seed funders, we're staying away. We didn't want anything to do with crypto. If you were a crypto company, we weren't interested. So some of them have some parameters of what they like or don't like. Some of them want like medical things. Other people don't want medical because it's such a long process, but they will tell you all about it. And the process is you literally just go in online and fill it out. And then if they're interested, they'll usually get back to you either way. But if they're interested, someone from the organization will call you and talk with you further about it, give you a little bit of information about them, and then they'll invite you to pitch at one of their meetings, and then you will pitch to the group of people there. And I would suggest if you're interested in this to go ahead and try. This isn't a one and done thing. And you get a lot of good feedback. We've had people present to us that we have pointed out flaws or things that we didn't like about their product. And some of them took our information really to heart and went back and made adjustments and then came back and repitched us. So you can pitch to the same companies again and again, especially if you've pivoted your company or made some changes. And it is a great way to pressure test your ideas and your deck, is to get in front of somebody and have them give you the feedback. They're really helpful. They're helping you, with the term sheet or valuation or the areas they think that you're weak on. A lot of them at the end of the presentation, they just say, hey, I would love any feedback you have. And they're more than happy to help. Some of them will talk with you offline about it. So if you're in that space, I would say, go ahead and try it out. It's kind of like job interviewing. You don't really know what you need to do unless you get, or what you're worth, until you get out there and start talking to people. And I think that's pretty much the end. The only other thing that I was going to share with you is my contact info. And then also, like I said, all these slides were from Winning Pitch Decks. These are the two websites I got them from. And you can go through them, and there's a really lot of good information about why the decks were good, particular slides that were good. And it's just kind of fun to go see some of the companies that like Facebook and Uber and Tinder, and see their pitch decks.